Alright, g'day there everybody. This is essentially the second video as at the 3rd of May. The close on Thursday. This is not going to be a market recap. If you are searching for that video, have a look at the video titled Hammer, Hammer, Hammer. It's really just to do with the basis, or at least the continuation of hammers off from that support area. This video instead is going to be that of a very quick individual stock update. What I'll do, I'll rotate through our top 12 list. I may not stop on all of the stocks, but I will stop on the stocks which are really noteworthy of a simple discussion. We have seen a couple pull back down to support. A couple have got also some pretty decent gap trade sort of setups as well. But then, in addition, I will also rotate through this external list that I have made in front of me as well. So sit in, potentially make a tea. I'm not sure how long this is going to go for, but I am going to go through again all of the stocks. So here we go. Here's Apple. Apple gapped up a little bit earlier in the week. It is largely moving sideways. It has closed this very little gap, really, which took place towards, or at least the midpoint of April. Now, what's interesting to note is that this is a very bullish gap. It is a sort of continuation gap. However, before we generally continue, and what I mean by that is essentially breaking above the breakout swing high up here, very close to 184, generally we will come on back down and close the gap. So we'll see how this plays out on Apple at the moment. I'm essentially sitting on my hands. I don't have a vested position, so to speak, in Apple, but it is going to set up that of a trade. I am happy that we have closed this gap, but post earnings, we also have this little gap here is as well, which sort of is interrelated to this most recent earnings gap too. So let's continue into Amazon. Amazon, once again, as you can see, really just to continue the narrative of really gap and gap theories, we have had another bullish gap to the upside. It was originally sold, and what we're doing right now is we're doing everything we can to close this gap down here, just or very close to 1,530. What's good about this is that we are still holding up. So as volume is trickling out of Amazon, it's allowing, of course, these exponential moving averages to catch back up to price. So we'll see whether or not this gap closes. If it does, pay attention to both the rising 20 and also the rising 50 exponential moving average along with this 1,500 handle. If we do see a successful back test and hold, it's going to be an exceptional position to potentially go long Amazon at a better price in regards to, or sort of compared to that of the breakout trigger up here at 1,647. It has been a relatively inactive week. You can see over the past 4 sessions, we have only moved 54 cents to the downside. But again, this is sort of the holding pattern which we see up and around historical highs. It does sort of look like that of a bull flag as well. That's why, of course, we check back with these rising exponential moving averages. So it is pressure cooking, so to speak, away. It's just not ready yet. We've got Boeing Airlines, which has come on back down. It has tagged and also tested this green rectangular box. We've been looking for Boeing Airlines to do so. Really during, or at least in last week's class, we recognized that Boeing Airlines was essentially in the middle. It was in no man's land between that of support down here at about 320 and essentially our target up here just shy of 350, or sorry, 360. So you can see that we have an outside day engulfing candlestick as at Thursday. This is the bullish signal that we have been waiting for. This is coming off from this support area. A lot of these individual stocks are setting up sort of similar patterns, and it's also correlating quite nicely with a bunch of hammer candlesticks that we have on the broader market indices as well. Volume was up ever so slightly today as well. So this is looking like this may turn into be that of the bull, or at least the buy signal that we spoke about over the weekend. So if you want, you can essentially bring a trigger down to really above the high of Thursday's candlestick, and the trade setup essentially is all the way back up to 356. You obviously have to keep in mind the market volatility which is going on at the moment, but very happy to see Boeing Airlines pull on back down and set up a pretty decent risk and reward ratio up to that 360 pivot. Now again, continuing into Baidu, think of Baidu somewhat similar to Apple, so to speak. We have had the positive earnings gap and we are largely moving sideways. This looks like that of a stair-step sort of consolidational pattern. Again, the common theme is that volume is trickling out, which is a fantastic continuation signal. The problem is that we have is that is this simply going to break out above 260, all right, or 258, or are we going to close the gap first and then continue? Either way, it doesn't really matter. It is a pretty decent trade setup, so to speak. The longer we hold moving sideways, the greater this trade is going to become, or at least the odds of this working out do go up exponentially. So it's not my favorite trade, so to speak, on Baidu, but it is setting up. What is more sort of, what is a nicer setup, so to speak, is that of Caterpillar. Again, we've been speaking about a lot of these trades sort of continuing, or at least coming back down to their support areas. And as you can see, Caterpillar is no different. Since this earnings candle, it was only really 1.5 weeks ago, 2 weeks at most, where we were up at 160. Now we're all the way back down. We tagged actually below 140 today, but this is the second time where we've come on back down to this sort of interesting colored sort of box. It is that of a support box, but it is a very important support box. The last trade we had on Caterpillar was a bounce off 146.27, and we had to trade this very close into earnings. Otherwise, we had to close this out prior to earnings. Now, what we've done is that we have seen a little bit of continuation after this long day Moroboshi. It hasn't really shown up in any dark sort of candlesticks, but what we are doing, again, twice this week, is setting up long lower wicks, very similar to this wick and also this wick here. So as we come on back down to the support area, as we are doing, as these oscillators pull on back into their oversold readings, you should expect Caterpillar, as long as it remains more or less above this colored box here, to begin oscillating. It might be a little bit ugly, I grant that, but you should see this come all the way back up to 155. So I hope you're seeing the common sort of theme with a lot of these stocks, whether they're pulling back into the support or they're holding at gaps and/or, pardon me, they're also sort of holding up above those exponential moving averages if they are already in that of a defined bullish uptrend. So you can see how when I talk about support on the broader market indices, how it is showing up on a lot of individual stocks as well. This sort of is a decent segue into that of COP. As I look at this picture, we've moved through earnings, and if I bring up these exponential moving averages, first of all, you can see that we're tagging the 20. Also, this looks like a stair-step consolidation, or that of a larger sort of bull flag continuation pattern. So what we're doing is that we've run on back up into this resistance area, what has become resistance, around this 66.50 area, and we're allowing these oscillators to really sort of just reset if they can. Now, what is important about this is as we move sideways, we are allowing the ADX to reset back down at the 20 line. The commodity channel index, which is fantastic for breakout pivots, is still holding very firmly above 100. So I'm loving this COP trade. It obviously hasn't triggered yet, but I think in due course it is going to, or at least it looks like it's going to, actually bounce off from those rising exponential moving averages. Now, CVX hasn't really done a whole lot. If I go to the weekly chart, we are down 61 cents. But at the same time, it is still holding up just above the support area. The problem is that we are in no man's land, and we really don't have a great buy opportunity of CVX at the moment, as sort of compared to a lot of those other stocks which are coming back down to support. Now, this sort of leads me into Google. Google over the weekend, we spoke about the potential of Google, pardon me, coming back down to 1,000, tagging this level, but then ultimately bouncing much like the market. Now, if you pay attention once again to the oscillators, you can see for yourself, what are we doing? We're moving back down into oversold. The fast line is beginning to turn sideways, or at least move more so horizontal. The RSI is adjusting a little bit in the MACD. I mean, this has been relatively neutral, but it is largely moving sideways. So coupled with the simple fact that we have another lower wick with this support, and of course, this open gap on Google, not to mention, of course, Netflix holding up and Apple gapping to the upside, Facebook also relatively strong too. You can see why I'm trusting and believing in the foundation of the market, so to speak, or at least we don't have any confirmation yet that the markets and a lot of these stocks, if any, are actually cracking their respective support areas. Of course, that can change, yes, but at the moment, there's no reason to be sort of panicking about that at this particular point. We'll see, obviously, how Friday sort of plays out, but at the same time, I think you're understanding, of course, the analysis and how this is all fitting together. Now, IBM has continued to sell off. We did tag 140, but this is a pretty decent candlestick as well. This is a hammer at support. This is a stock which is very overextended, very oversold, and this may turn out to be that of the bottom. I'm not going to call the bottom, so to speak, on IBM. It's going to take a little bit more data to move through, a little more sort of end-of-day session closes. But for argument's sake, what we've essentially done is overshot or got very close to that outer Bollinger Band, and this is mixed with a ton of support down here, and of course, this open window. So this is that secondary push that we've spoken about. It could have ended at 144 or come down to 140. It's come to 140. We've got that long lower wick, and this is the location, so to speak. Candlesticks, of course, they derive their meaning, okay, at locations at being either support or resistance. This is the support area. that IBM may make that turn from. So I'm going to keep a very close eye on this during Friday. I'll speak about this in more detail over the weekend, but that could set up a pretty decent bullish trade on IBM if the markets hold support and begin to bounce. Now, this is Netflix again. We've got multiple sort of shooting star candlesticks. At the same time, we also have these type of hammers. The problem is that if we go back to the discussion on location, we're still at the midpoint between support and also resistance. So essentially, there is no trade on Netflix other than if we can more or less continue to move sideways and see a bounce off from support and then break the high. This is going to be a trend continuation type of trade. We have filled the gap and we did overshoot it to the downside. However, we have stabilized since. So this is a trade which is brewing. Also, you should pay attention to the Bollinger Bands. If we start to see a squeeze, this is going to be essentially a neutral trade moving forward, but generally Bollinger Band squeezes, they work themselves, or at least the directional break generally is already in the trend direction. All right, now let's move into Tesla. Tesla has had, or at least it reported its earnings yesterday. You saw the original gap down to 280. It was bought. All right, so it was actually a white candlestick. This is good. I mean, I'm happy we've moved through Tesla. What earnings has essentially done is given us the bracket for the upper perimeter and what is now looking to be that of that support. I'm not looking to actually trade Tesla, so to speak, short on Friday or think of anything like that below 270, nor am I really looking to trade this long above 310. This is probably going to rally back up to 300. And then once we get to 300, that's where we'll start doing the bracket trades, or at least examining this in closer detail. All right, it's going to be a good trade moving forward, but at the moment, there's still a little bit of volatility around Tesla. Obviously, the direction of this is not settled. I mean, for the entirety of April, we've moved absolutely sideways. We haven't gone anywhere. If I bring up the monthly chart, you can see for yourself, we're down $9.45. But what we have also is, again, a candlestick with a pretty decent upper wick and lower wick. And what we don't have is momentum or follow through, like any colored sort of long day Morobozu candlestick. So that is Tesla. Now, what I wanted to do, I wanted to bring up, first of all, if my charting software wants to come back to life, is PayPal, because PayPal established a pretty interesting candlestick today. This is a reversal candlestick and it is showing up at our green rectangular box. This is a green rectangular box that I spoke about, I think earlier in the week, something that I've been paying attention to, and it's also setting up at this rising 200 simple moving average. Pretty decent volume. This is not the end of close volume, by the way. So we're going to have to look into this, but it looks as though PayPal might be beginning, to set up another wave rotation back up to about $78 per share. But probably what's going to happen is we're going to create another lower high, which will be below about $80 per share on PayPal. So if this support level holds, if we don't get any movements below the intraday push during today's session, PayPal should rally back up to about $79 per share. This brings me, of course, back into EWZ. Very similar type of trade setup. I just got a sort of an error sound in the back of my headphones here. EWZ appears to be breaking this 42 handle over here, or at least the bull trend and also the support area. We're starting to see a couple of lower wicks on these candlesticks. I'm still expecting this to reverse very quickly. We might actually come down to the 40 handle before we see the bounce, but essentially my target on this is still up here at 47, and we're really just trying to push on back down into oversold. The RSI is back at oversold. When we get down to these readings, you generally see the bounce, and it is coinciding with a lot of sort of X marks the spot, multiple areas of support. We have pushed below that rising 200 simple moving average, but this can change very, very quickly, especially if you see momentum start to flow back into the broader US market indices as well. So I just wanted to say, look, I'm still holding this. I'm actually looking to add to this if I see it sort of stagnate around this 40.50 or even 40.73 area. It'd be pretty decent to see that actually occur. Just make sure that you have long dated options if you're looking to play this type of trade. I love these types of trade setups. However, it hasn't held this pivot, which is a little bit of a surprise to me. No cause or major cause for concern. Just think about, of course, the expiration date that you're looking to leg into when it comes to EWZ. Now, going through this external list, we've got Alibaba, which has produced that of another sort of hangman at resistance / hammer at support. Again, it's sort of in no man's land. We're going to have to see how earnings plays out. If we come back down to 170, that's going to be a phenomenal trade off from support back up to $205 per share. We've got Facebook, which is still largely moving sideways, very similar to sort of Apple at the moment. We have this gap to the downside. We have a gap to the upside. I'm sort of staying clear of Facebook and also Apple for the time being. I do have areas on the chart where I'm genuinely interested in doing things. However, we're simply not at those areas at the moment. So it's best just to leave this and let, of course, that battle just play out with you really not partaking in that whatsoever. You really want to jump in at the right locations. And I think we've mapped out those locations relatively clearly in Facebook. We have LUV also, which is coming back down into this green rectangular box. Surprise, surprise. Pretty decent buy area here. This is the weekly chart going back to 2017. It also acted as resistance in the year 2015. So this is critical. Also, you can see we have that long lower wick over here. We've pushed on back down to it, and this is probably going to correlate, if I can bring it up, with the oscillators again moving back into relatively oversold conditions. So if you start to see pops on LUV, also again continuations on the likes of PayPal, then this has got a trade setup which could take us all the way back up to $61 per share with a very low sort of risk ratio on the trade, or at least a very high reward risk ratio, which is going to work in our favor. So you can see how these are beginning to sort of fall into that category of bounce plays off from support. Pretty interesting, because as I move and rotate into Delta Airlines, the same is true. Now, again, it looks as though we're in some form of a relatively nice symmetrical triangle. We are on the outskirts of this. I love these X marks the spot plays. You've got clear resistance, clear support. This is the weekly chart mixed with, pretty much a hammer at support off from this trend line as well. So if we see any weakness, okay, if the market does sell off and if we see Delta pull on back down to $50 a share, this could be a very decent trade again off from support. Otherwise, you can be looking to maybe even play a reversal off from this hammer at support as well, given that we are essentially at that lower trend line. And the trend, of course, is in effect until it gives us definitive signals that it has reversed. Although we don't have those signals that the trend essentially has reversed, this is looking like, again, that of a continuation signal. The candlestick pattern is a continuation signal, and we are very close to, of course, horizontal support as well on Delta Airlines. So a pretty decent trade there as well. We've got I pushed the wrong one. This is Lowe's, LOW. And I think this has earnings upcoming. It does. I was looking into this a little bit more yesterday. This is scheduled for the 23rd of this month. Look, when I see earnings, it really sort of stops me from placing trades, because it makes me, or at least it forces me, to exit the trade a little bit sooner than what potentially I may ideally like to do so. However, again, this has got the nucleus, or at least the blueprint, of a very strong bullish continuation. You've got a trend in effect, continuing a series of high lows and also higher highs. I love it. The problem is we have earnings. So I just wanted to make that point clear. Otherwise, you could pretty much jump into this if we broke above the high of Wednesday. That is low. Now, I've recapped PayPal. I'll move into ABT as well. Again, very similar pattern. Back at support, multiple areas of support. Do I like this as much as other stocks? Probably not. I sort of find myself siding with, say, PayPal or LUV or DAL, okay, so to speak, as opposed to ABT. However, if this does continue to pull on back down, no guarantees that it will, you get the picture. You get the picture. And this area up here, sitting about $64 or $63.50, that's going to be your new target. We're close to it. But at the same time, I would love to see this sell off a little bit more prior to jumping into ABT. Now, let me move into FedEx. FedEx, you can see again, you see how we identify these green rectangular boxes, and you see how there's the lower wicks and white candlesticks as soon as they tag them. What we're doing, again, it's not rocket science. It's very simple, but at the same time, it is very effective. Is that we're simply picking supports, very important supports that have held in the past, and we're playing the bounce off from them. This is also, I went through, and the reason I chose FDX was because not only were we at a very important support area, but we're very close to a rising 200 simple moving average. Now, again, this is not the closing volume print, but if we see a little bit more weakness, say FDX does definitively sort of sell off $10 almost, it comes down to 234 or very close to the rising 200. That would be a really decent location to begin jumping into FDX if it suits you, of course, only if it suits you. But that's what I'm looking for. I'm not in FDX. I hope I haven't missed the reversal. It happened very quickly today. But if I do see another dark candlestick, and if it does come down to even 236, that's where the reward risk is what I like to trade. Okay, and we've identified these types of trades. It works in conjunction with the market. And, I just like these trades. Now, HD, This is something that also has earnings. It had a Bollinger Band squeeze type of breakout. This was towards the end of April. I wouldn't be looking to get involved with HD at the moment. It's something I'd simply sort of sit on and wait until we progress through earnings. So that applies. What was the other company? I believe it was LOW. Let me just check that. So it's going to be HD and also LOW. They're the two stocks that have earnings coming up, and of course Microsoft too. I spoke about Microsoft and why I don't want to include this in the list, and the reason for that was because when it produces a higher high, it pretty much reverses and it comes back down into its range bound type of market. So the way to trade Microsoft is to actually buy the dips, and essentially this is a dip right here. The problem is I just don't like this type of chart behavior for Microsoft. I mean, I like other charts with sort of wider ranges, percentage sort of movements, at least 10% between support and resistance. And personally, it just doesn't fit my sort of my psychology, or at least my psyche, so to speak, of what I want in trades or what I want in individual stocks and how I want to play those stocks trading options. So if you see things differently, by all means, do as you please with Microsoft. Do as you please with anything you choose to. But I'm just sort of walking you through my thoughts on Microsoft. It might turn out to be a great trade, but at the same time, I'm just not really feeling it. And I haven't really felt it, so to speak, for quite some time. All right, so that's going to be some individual stock recaps. I've also looked at gold and silver and the US dollar in a previous video. Any questions, email me, success@pivotpoint-trading.com. Enjoy your Thursday evening, everyone. I'll be back with you over the weekend in Pro. All right, farewell. It's James signing off on behalf of Pivot Point Trading. Goodbye.